Morning, everyone. So, thank you for joining Trustway Cybersecurity Virtual Workshop Series, the transformation journey for financial service sector, post-COVID next-gen security practices. So, I'm Gigi from Singtel. So, we are pleased to have different vendors to join and share their perspective through this workshop series to touch on the post-COVID best practices. So to kick off this series, so we are pleased to have Consulting Engineer Manager APAC from BitSight Technologies, Terence, to share his view. So if you have any questions, do let us know in the conversation box. So pass over to you, Terence.
All right, thank you. Hi, good morning, everyone. Thank you for taking the time to join us this morning. Just give me a quick second to switch the screens around. Once I do that, you will stop seeing my face. All right. So you should be looking at a PowerPoint slide right now. Gigi, can you confirm that for me, please?
Yes, I can see.
Okay, fantastic. So let's hop to it. Thank you all so much for your time. I'm Terence Chong. I'm the consulting engineer manager for BitSight covering APAC. I've had about, I don't know, 10 over years of cybersecurity experience, and I've been with BitSight for 3 years so far. It's been a great journey, and I hope, if you have not already heard of BitSight, I hope today's session will give you a much more better understanding of what the security risk rating services actually provide. And what you see on the screen right now is what I'm going to be talking to you about today. It's quite a mouthful. Transformation journey for financial services sector, which is the series. Thank you, Gigi, for introducing that. And I'm supposed to talk to you about post-COVID next-gen security practices. I've taken a peek at the RSVP list this morning, and we've got a pretty good spread actually. We've got representation from compliance, we've got representation from legal, risk, of course, InfoSec folks too. So this should make for a pretty interesting. This should make for a pretty interesting presentation. I honestly hope this could have been a discussion, because the last time when I saw this varied number of people in a room was with a TPRM workshop I was working through for a financial institute out in Australia. So that's one of the things we do, third-party risk management workshops. And that should kind of give you a bit of insight into what we're going to talk about for today. So I've summarized the lengthy presentation into a few short, simple words. We're going to talk about managing cybersecurity risk. Now, more specifically, we're going to be talking about managing third-party cybersecurity risk. As with the topic, post-COVID environment, what's the next-gen cybersecurity practice? I believe all of us are very aware that many businesses have gone through digital transformation in response to the pandemic. And it's no surprising to see headlines like this, from the World Economic Forum. This was dated back on 19th October 2020, that companies now face an urgent choice, right? They have to go digital or they go bust. Now, that is the harsh reality of what the pandemic has done to all of us. We've been made to stay at home, we have to social distance, and we can't gather as much as we can in the past, pre-COVID. Now, what that means for a lot of retailers and a lot of businesses is that they're going to have to find other means of reaching out to their consumers, right? Not just in the retail space, but for the other B2B businesses as well. It's a whole chain. And what that has made businesses react, or what they've gone to do, is that they've invested a lot into digital transformation. Now, according to this study by IDC dated 20th of May, which is about a year ago, 10.4% growth in terms of DX spending, which is digital transformation. What is digital transformation? Essentially, it's migration onto the cloud, onto mobile platforms, payment gateways, and all that. And if you are in the retail space, or if you've spoken with some of your friends in the industry, or even personally as consumers, you would have shopped online, right? You would have gone on to Zalora, you would have gone on to Lazada as well. In Hong Kong, you've got Topo, right? Taobao and so on, and you would have bought stuff off of there. And a lot of businesses have made such a migration into that space that spent up to about 1.3 trillion US dollars in those investments. And of course, they've made investments into mobile applications. They've made investments into websites, the web experience, establishing omni-channel projects, as well as making sure that they are available in a multi-channel way. Now, they want to make sure that they are able to respond to their consumers where their consumers want to be, right? So if you want to buy off a website, you've got that option. If you want to buy off of a mobile phone, they are there as well. They want to make things easy for you. So they enable things like OTP to help to secure your procurements. A lot of payment gateways are available today, like Alipay in our region. Of course, more specific to where I am, out of Singapore, we've got GrabPay as well. It makes everything a lot more convenient. So companies have done a great job in reacting to the pandemic. And by some accounts, they have effectively gained 10 years worth of IT progress in a matter of 1 year, in single year 2020. Right? And that's all great. A lot of businesses are doing well, and they're looking to emerge even stronger. But this reaction to the pandemic has also led to a lot of exposures. So there are consequences in growing so quickly, right? So a lot of organizations are now facing this. They're facing increased amounts of risk. They are facing increased amounts of focus as well as scrutiny. Now, what do I mean? Because if you think about it, growing organically within a year to meet all this omni-channel, omnipresence requirements, it's not going to be really practical, right? You're going to look to outsource. You're going to look to mobile application service providers or programmers, outsource programmers. You're going to look to move out onto the cloud to scale your projects. You're going to look to content delivery networks to be able to accelerate the delivery of content to your consumers. So 70% of the organizations today have a moderate to high level of dependency on external entities. And you can kind of see where this is going, right? Your vendors are essentially becoming the new attack surface for your organization. Now, in the past, we've all done really well, right? As InfoSec practitioners in the room today, you will be very aware, organizations are so mature in that sense. They have deployed a single tier firewall. They've gone on to deploy 2-tier firewalls. There's a lot of vendors out there that deal with antivirus on the endpoint. That's gone on that's kind of matured, or if you say evolved into the EDR, right? Endpoint detection remediation, and now they've gone on to the next gen thing, right? Which is XDR, which is a huge thing altogether. So it's just growing, and you're being able to protect internally very well. But what are you going to do about this new wild west? And it doesn't help that cyber threats are constantly evolving as well. There's a whole economy around malware, right? You call it mass malware as a service. You would hear that a lot from the InfoSec vendors also, if you talk to the cybersecurity practitioners. And in the last few months, in the last 3 to 4 months, there's been 2 huge exploits and vulnerabilities exposed. You've had SolarWinds, and you've also had the Microsoft Hafnium exploits exposed, and those are huge things, right? And if you think about it, that's probably isn't just going to get better. It probably is going to get worse. And as you expand out, you are really increasing the exposure to such vulnerabilities. And of course, as all this news starts to hit the headlines, and with so much investments into digital transformation, the board is going to be really interested to keep those investments safe. Right? So there's going to be more focus. You see on the slides, hyper focus. There's going to be more focus in cybersecurity. Now, not just cybersecurity to protect their investments, which is exactly what I just said, but also pressure from the investors. Right? If you are aware of this term, ESG, which stands for environmental, social, and corporate governance, are key metrics that investors like BlackRock is looking at today when they are looking to invest in companies. Right? They're looking for companies that are environmentally responsible, socially aware, and good corporate citizens of their countries, and good corporate governance as well. So they're not up to any funny business. So these are key metrics. And if you're able to demonstrate, at least from a cybersecurity perspective, which is part of corporate governance, then you're going to be able to demonstrate you're doing pretty well in terms of managing the company one way in one way, right? And I'll talk a bit about this towards the end of my presentation. So the board of directors, C-levels, sure are getting involved in this, and the regulators are not making things any easier for them, right? There's increased regulatory scrutiny, and as organizations move on to the cloud, and as consumers get more involved, and they're starting to make more purchases online, there's a lot more personal data out on the internet, hosted on cloud platforms. Whenever there's a data breach, there's going to be real significant damage, right? And that's the reason why we've got GDPR, and in our region, as you see in the next couple of slides, increased regulations as well. And all this is in response to exactly what I've mentioned, increased sophistications. You see SolarWinds being hailed as the largest and most sophisticated attack ever by the Microsoft president. And this was back in 15th of February, just 2 months ago. So it's pretty significant. So if we pause here for a second, and then you take all this in, do you think SolarWinds hack is going to be the last? Do you think it's going to get any easier and any less sophisticated? Chances are it's not, right? If you're looking to protect your own organization, it's within your control. You can spend money, time, and effort into dealing with it. But when it's with your third party, companies that you may not hold sway over and you have no control over what they do, then, and if you look at the number of vendors you have, the problem is really magnified many folds. Adding on top of that, you've got software vendors with IT vendors with vulnerabilities in their products, right? Some of them have hard-coded passwords in their appliances when they sell it to you, and that leads to backdoors. Softwares that just consistently roll out, and you see it on the screen. So I won't elaborate any further. So all this is going on, and it's not gonna let up, right? And as I mentioned with regulations, you can see in January of 2021. Singapore's Monetary Authority of Singapore, as they were issuing the revision to the technology risk guidelines that they have, also mandated that their organizations have a strong oversight onto their third-party service providers as well as technology vendors. So this is fairly strong language for a regulator, and it's really setting the stage for organizations, right? And you are starting to see the build up to this. And there are real world repercussions to businesses. I guess, when the ransomware broke, some of you would have read the news where in a hospital out in Dusseldorf, Germany, people were being turned away because the hospital had their systems down and they weren't able to take more patients, right? So those were some real world health considerations. But in terms of monetary to the businesses, you're looking at this. $1 million fines, Sing dollars, be it, but still $1 million fine. And this actually happened in 2019. So in Singapore, many of you would have heard about this, where the Sing Health, which is a healthcare service provider in Singapore, was hit with a $250,000 fine. Right, so they were the data owner, and they had a service provider, IHIS, which is the healthcare sector service provider. The IHIS was hit with a $750,000 fine. This is for a breach that happened in July of 2018. So as you can see on the screen right now, by January 2019, about half a year, both organizations were hit for a total of 1 million Sing dollars. So that's pretty significant. And this is setting the stage and the tone for data breaches as we move on in Singapore. And of course, this is a sign of things to come in a region. At the moment, I'm aware Thailand, Indonesia, as well as Philippines are looking at very similar regulations around personal data protection as well as managing third party. So this is something that is really coming to bear. As you're aware, as you're all aware, Singapore is also a very fine city. I can say this because I'm Singaporean. I hope I don't get beaten up over this. It is a fairly serious issue. And let me show you the timeline that's building up to this. We kind of see this, well, the MAS TRM isn't new, but kind of see this starting to gain traction in 2019 with Australia's APRA regulation, CPS 234, that mandates financial institutes to have oversight into their third-party service providers. Of course, this isn't all that new with Hong Kong as well as Malaysia. In 2020, Hong Kong HKMA actually released the revised CFI, the Cyber Fortification Initiative, right? And as part of that, the CRAF covers the requirements to have oversight onto your third parties, right? So they break it down by basic, advanced, basic, intermediate, and advanced. If you want to be in the advanced stage, you've got to have a fairly regular means of assessing your third parties. Adding to that, we have Bank Negara, which is the Central Bank of Malaysia, with their risk management and technology. That also mandates that an organization should have at least the same level of cybersecurity security practice or maturity as the vendor does, as the company does, and expect the same of their vendors, if not better, right? So that's RMIT. And of course, as you've seen with the earlier screenshot in 2021, Singapore's very own MAS released a TRM guidelines revision, updated it and included stronger language against having strong oversight into their vendors, right? And this is constantly growing, and it's just so difficult to keep up. Studies done by Ponemon as well as Deloitte cited the lack of visibility as one of the key challenges. Now, if you ask yourself, right, if you're how many of your vendors are actually inventorized within your organization? And that's really challenging. If you think about it, yes, we do inventorize our tier one vendors, our most crucial vendors. You may be quite aware that sometimes it's your smaller, weaker vendors who are the most vulnerable and most potential to be exploited as a stepping stone into your organization. Because if you think about it, so many years ago, back in 2013, if I remember correctly, with the chain of supermarkets in the United States, Target, they were breached because of their HVAC vendor, right? HVAC meaning heating, ventilation, and air conditioning. Who would have expected the HVAC vendor to have remote access into the organization, which eventually led to the theft of over 1 million credit card accounts? That is just unthinkable back then, but it happened through a HVAC vendor. And if you follow the news articles more recently, there's even been an incident where it was tested that hackers can steal information through printers as well, right? That's again not very new, but it's coming to light, and these kinds of vulnerability are being monetized, right? The next thing that was cited was really the lack of resources. You don't have enough manpower, right? Companies in the past, organizations in the past, just didn't see this as important. But with what happened in 2020, the exposure, the attack surface has really grown exponentially. It's incredible. Now, of course, the lack of an actual framework, an actual program, it's also impeding what is required. And this, of course, overall leads to overall lack of confidence. 65% of those surveyed rate their TPRM program as less than highly effective, right? Which is key concerning. So what exactly are the challenges? 54% of the companies do not monitor their third parties. 62% fail to hold their extended enterprise to the same standards as their own. And if you think what I just read out sounded familiar, because that's part of Bank Negara's RMIT. You need to hold your vendors to the same standards as yourself. Right? And keeping in mind, this is a study done in 2018. You see that appear in the regulation in 2020. And 63% cited, insufficient resources as a key challenge. And you simply can't keep up, right? It's just like cybersecurity. It's one of those problems where you just simply cannot hire enough people to take care of it. Right? So from the field, as I mentioned earlier on, BitSight, as a consulting engineer myself, I do conduct third-party risk management workshops where we get, where it's cross-functional and we invite stakeholders from the different teams like legal, procurement, the line of business owners, IT, and so on, the different team members to come and sit together and, to talk about third-party risk management and what works for the organization. And so what we've been able to determine is, like, from the field, what we've seen is really this. Sorry. And this were all the feedback that we've gotten. So you can see, let me orientate you to this a little bit. In the blue bars are representative of 2019, which is right here, and then the green bars are representative of 2020. So you can see overall there is a big increase, right? Not huge, but a big enough increase from 2020 challenges from 2019. Now, the first challenge you see here is really this, right? The assessment response as well as validation has been a key challenge, and it's increased. Of course, when you have staff, you have people you're working with, they're working from home and don't have access to the necessary references that they need, then response is going to be slow. Now, of course, validation is a key challenge. You are not able to send people on site to conduct interviews or to do the necessary on-site checks. So validation is going to be a challenge, or has been a challenge. Now, the second challenge that organizations have is really this, right? The ability, cross-functional process that I kind of described earlier on, right? You need to sit all your different team members together to get them, get all your ducks in a row, right? And to move in a single direction to make sure things are done. And the key challenge is sometimes the different teams do not know that they are stakeholders in the process. And that's a key challenge, right? So that's the second main challenge. And of course, the last is this: the assessments take too long. You probably have heard this before. I'm surprised this is third. Personally, I would think this is the first. Because assessments do simply take too long. If you send out a security questionnaire, it's going to take the vendor anywhere from two weeks to 4 weeks to get back to you. And once they do, there's a process of back and forth clarifications and so on. And it's really literally quite a painful process, right? It's just not as simple as it should be. So what are some of the current assessment methods that's being used that's giving so much problems with validation, cross-functional practices, and and assessments taking too long? Now, I believe these assessment methods will be familiar to many of you, if not all of you. The first are the audits, right, where you have the ones that are third-party initiated. Sometimes you have your customers who will send their audit team on site to do some assessments and audits on what is currently going on in your organization. You have the ones that are regulatory mandated. So just like in Singapore, right, we have our monetary authority who will give a notice and literally come down 24 hours later just to audit what exactly is going on, making sure everything is clean. And then you have the ones that are self-imposed, right, in preparation of the two above mentioned audits. And then you've got assessments, right? You've got your gap analysis where you bring in folks like PricewaterhouseCoopers to study your organization, and then at the end of the exercise, provide you with recommendations. The cybersecurity team will be familiar with this next one, the vulnerability assessments, where you get a tenable qualys and you perform scans against your own footprint, right? You kind of break your entire footprint down into blocks and you scan them with some regularity, like one week you'll be scanning this segment, the other week you'll be scanning the other one, and so on, to find out where are your vulnerabilities. Now, of course, the last one I've got up there is pen testing, right? Who can forget about those, right? Penetration testing. Very good, very comprehensive, where you pay a professional, gray hat, white hat professional, where they'll come in and they will poke around your organization, your footprint, and determine where the vulnerabilities are, and then they will exploit those vulnerabilities to see how far they can go, right? And this is potentially disruptive, as what I've described. So these are just some of the assessments. Now, of course, there are other ways of assessing your own organization, such as operational statistics. How many infections have you had this year? How many remediations have you done, right? These are just some statistics. And of course, you're looking at performance measures as well, the mean time to detect, mean time to remediate, and so on. And of course, compliance goals, right? With some regularity, you will look internally on yourself to determine how many non-compliances do we have, what is going on with our operations, and so on. So these are just some of the current assessment methods. And as I go through all this, you will kind of start to see some common themes, like this. A lot of these assessments are point in time, right? They don't. It's with some regularity. Typically, it's like for vulnerability scans, it's once every few weeks. You might think that it's continuous, or with the audits, it's even worse. It's once a year or once every few years, even, right? It's very, very point in time. And with what I described much earlier in this presentation, is that things can change so fast. You can imagine if we did an assessment or an audit, say November of 2020. Today we're in April of 21. Things have changed quite a fair bit, right? With hafnium and SolarWinds. Now, of course, out of these assessments, as you start to find the issues and identify the gaps, how are you tracking them? Are you tracking the remediations with any efficiency at all? Right? You identify all the problems, the management may track it, may not. And how do you measure this remediation, right? So that's another challenge, right? Finding out the problem is one thing, fixing it is one thing. Being able to track all this, it's really a separate thing altogether. It takes effort too, right? Ultimately, what is the effectiveness of all this exercise? Now, the question that really pulls the effectiveness is this next finding. We kind of realize, as with Target, right, and the outbreak of vendor exploits and all that, in 2013, there's a big divergence, right? The number of third parties and their associated risks are just not being properly managed, right? Traditional methods that I've just talked about is simply not scalable. You can't have enough people dealing with it. And if you look internally on your own organization, you've really got to think about, do we have a third-party risk management framework or process that is scalable and managing all the vendors that we have today and the vendors that we are looking to onboard tomorrow? So the problem is current and is only going to compound more and more. So how some of the banks I've talked to are really dealing with these problems. What are their so-called next-gen approaches? I hope some of the InfoSec folks are cringing as I say the word next-gen. Is this, right? Collective assessment approaches. This is a fairly common practice at the moment, right? Standard frameworks, things like ISO 27001. We're talking about NIST, CSFs, or Cloud Security Alliance, CSA frameworks. So a lot of times as you engage with your vendors, you ask them for such documentations just to show that they have these minimum standards or these frameworks that they adhere to and they are practicing, so that this organization is of a certain standard, right? So if you are referencing ISO, and so are they, then that they are at least on par with you, if not better, right? So that's how you can respond to regulatory requirements. So that's standard frameworks. And then they've got also shared exchanges. Now I'm going to mention IHS Markit, right, which is a market research company that I'll mention again later on. But they do have a platform that's called KY3P. Now, what that stands for is Know Your Third Parties, right? And in this platform, they actually provide you with a fairly comprehensive insight into the organization you are working with, such as who is on the board of directors, whether there are bankruptcies, whether there's any kind of criminal history. For individuals, they also look at the financial history of the organization, what is your financial credit ratings, and so on. Right. At the same time, they also compile security questionnaire responses. So it's a single repository that when they will feed this their customers, the vendors, with this security questionnaire that is filled up. They keep it, and upon the request of customers, they will actually share this same request, same questionnaire response out to their customers. So rather than have a one-to-one engagement for the purpose of questionnaire responses, is now a one-to-many. So the vendor in this case fills up the security questionnaire once, and IHS Markit effectively feeds it manifold out to their customer ecosystem when requested for. So that's going to make everyone's job a lot more easier. So that's collective assessment approaches. And then you've got collaboration platforms, GRC platforms, right? RSA's Archer GRC platform. That's a mainstay, in the world for a while now, right? And it's very comprehensive. It's a big monster. But there are also, pardon me, next gen alternatives. We've got SaaS service providers like OneTrust Vendor PD, third party trust, right? Who now provide workflows around gathering responses, security questionnaire responses. They give you the means to effectively archive and store artifacts that you need to collect. And all this is cloud-based with very little intervention on your part. So this brings the barrier to entry a lot lower for you. So if you are looking for a collaboration platform, look for one that makes your job a lot more easier and very little rollout deployment times. Now, the last one I'm going to talk about is the security ratings, which is where BitSight plays. And this is a means for the organization to be able to continuously be updated on the posture of their customers, right? So it's not meant to be a replacement for your pen tests, your vulnerability assessments, and so on, but it is a very good accompaniment to those exercises, right? You can't do a pen test on your vendor all the time. You can't do a VAPT scan on them all the time, and you need permissions as well. But in this case, with something like a security ratings platform, you can have a passive means of monitoring their footprint, right? So the moment something goes wrong, like if a botnet C2 callback suddenly appears, you can be sure that BitSight should be able to capture that and reflect it on their ratings. How does it look like? Effectively, what BitSight provides is a risk rating of between 250 to 900, just like a financial credit rating. We are objective, we're continuous, we do this on a daily basis. The platform is updated every day and it's data driven, right? So effectively, what we aim to be is a common unbiased metric. We're just like a ruler, right? If I'm a 1 meter ruler, I'm going to be measuring every single thing in accordance to that. So it's 1 meter, right? So it's a standard that you can apply to all organizations within your ecosystem. Of course, like I mentioned, SaaS ratings are updated daily. So how does this happen? And I'm going to go through this fairly quickly. Reach out to us if you want to know the details. I'm always happy to talk about this. First, what BitSight does is that we collect data, right? We are data hungry. We go out and we collect data from 120 different data sources and we process them, right? We do a lot of cross-validation, cross-relations, and so on to clean up the information. Now, whether it's in relation to any company within our sites at the moment or within our library, it's regardless. We just love data, right? We crunch it up, we keep it away. We are just like a hoarder of data. Next thing, what we do is we will go out and research companies. So if you give me a domain name, we'll go look up on the public registries what this company actually owns, what are the IPs, what are the domains. And then we take it a step further. We look at your annual reports. We look at LinkedIn records. We look at Bloomberg write-ups. And we determine what is the architecture of, what's the hierarchy of the entire organization. Right? So against that, we map across all the IP addresses and domains as well. And we correlate it back to this information that we've been gathering for all this many number of years. And then we can tell you in the last 12 months if this company has had any kind of botnet infections, open ports, and so on. So we're almost like a time machine, if you will. Right? And this information is filtered into 4 main categories, where we tell you if the organization has had any kind of compromised systems, such as botnet infections, potential exploits, and those cool stuff, right? And also we look at diligence information. You can look at this as hygiene, right? If the organization manages their SSL certs well, whether they have any kind of open ports, or have they been opening up their telnet port regularly, for remote works, and so on. We look at all those information. We look at the user behavior as well. So if your organization has had file sharing, we're going to pick that up. If the organization has had employees who have had their credentials, email addresses, passwords, and so on leaked in publicly available data breaches, like so many years ago, Ashley Madison, we're going to pick it up too, right? So and this gives you the basis of the user behavior. And finally, we look at data breaches also. So we take data breach news from authoritative news sources, like in Hong Kong, you have the South China Morning Post. We've got Straits Times in Singapore, Channel News Asia for the region. We monitor those. Now, you will come across certain vendors or certain service providers that will look at dark web as a data source. I just want to make a note that we don't do that because dark web data sources are really not verifiable, right? And of course, if we use that for the purpose of ratings calculation, it's not going to be very fair for that company, right? So we don't do that. And this, as a whole, is how we categorize our findings and eventually use that to calculate the ratings of between 250 to 900. So if you are, towards the higher end of 900, you are in a much better cybersecurity position. So, of course, the question in your mind right now is, why is this relevant, and who is BitSight to come and give us a rating and tell us how good or bad we are without even talking to us? Now, it has gone through quite a number of studies. In fact, there were 3, independent and objective study. And they have actually correlated BitSight's rating to the likelihood of a data breach. So it's found that a company that is rated 400 or below is going to be 5 times more likely to suffer a data breach than a company that's rated 700 or more. Now, this likelihood of the data breach, it's actually reduced as you improve your cybersecurity rating, right here. So you can see if you're anywhere from 400 to 500, you're going to be 4 times more likely. If you're 5 to 600, you're 3 times more likely to suffer data breach, and so on. Now, so who has done this study? One of them is Air Worldwide, and they are in the space of catastrophe risk modeling. So they really help cyber insurance companies calculate risks so that the insurance companies can calculate the premium for the organization. So Air Worldwide is one of the companies that worked with us. Advisen is another company that's also looked at our data and come to a similar conclusion. And finally, IHS Markit. So I kind of mentioned their name earlier on. So market research company, right? So they kind of looked at our data and drew the same conclusion also. So there you go, 3 independently non-paid objective studies into the relevancy of BitSight's data. Now, of course, there's more to it, right? As I mentioned earlier on with the ESG, environmental, social, and corporate governance, and being able to demonstrate that if you are doing well in terms of your cybersecurity practice, you're going to be a pretty good, well-run company as well. And that's not without validation as well. So BitSight has worked with this company, Solactive, who's a German index engineering organization. Essentially what they do is they index the stock markets and provide indexes. So they have also correlated BitSight cybersecurity rating against the stock market and determined that companies with a good cybersecurity rating is likely going to outperform the market by 7%. So that's another key indicator for you to look at, not just in the likelihood of a data breach, but also how well a company is actually performing. Right? Now, the last thing I'm going to talk to you about today is really this. BitSight have also worked with this company called Cover, and Cover is a cyber risk modeling company. And these guys go out, excuse me, they collect a lot of data on cybersecurity risk claims from the insurance organizations. They also work with security vendors and they collect information based on size of company, the kind of cyber security incidents that occurred, and what was the cost of that incident. So they collect all this data, and they've worked with BitSight, and they were able to put the two together, right? The security performance data that BitSight has against their cyber risk modeling data, and be able to derive the cost of a risk exposure, right? And if any of you had been in such an exercise, you know it's a very tedious exercise. But by nature of what BitSight can see, the size of organization, the footprint you have, and the likelihood of a data breach, and when we marry that together with Cover's intelligence and big data lake of what is the cost when something happens, we can tell you the long tail of your risk, right? If something were to happen, if you have a denial of service attack, how much is that going to cost you based on your size of organization, based on the number of employees you have, and so on. It's a fairly intuitive. It's a much more easier exercise than having somebody come in to interview the entire organization. Of course, both approaches have their merits, but this approach with financial quantification between BitSight and Cover, it will make your job a lot more easier, right? So, in conclusion, as I've been talking for so long, in conclusion, three main things. The attack surface is growing with the rise of the extended enterprise. You are outsourcing, the businesses are doing that, and your businesses will continue to outsource. It will only grow. Right? How you deal with that? Focus in your areas of risk. Right? Determine where is most impactful, where are your most costly risk exposures, and work with your vendors to remediate that. We highly encourage collaborating with your vendors. Right? If you hear the different, the different countries out there, they're talking about collaborating in terms of cybersecurity. Why shouldn't you be collaborating with your own vendors as well to improve their cybersecurity risk and improving yours? Which brings me to my third point. Reducing third-party risk benefits all parties, not just for your vendors, but ultimately for yourself too. And with that, thank you all so much for your time and attention for the past 50 minutes that I've been talking. I really appreciate it. And I hope all of you have taken away something today from my session, not just about BitSight, but also gain some awareness into what is going on in our world today. And with that, I will hand the session back over to Gigi.
Thank you, Terence, for the
You're welcome.
informative presentation. So I do believe a security rating going to be a very good data, presentable data for doing the reporting or to management. So maybe I'll leave the time for Q&A.
Mhm.
So feel free to voice out if you have any questions to Terence.
The attendees are being shy again.
Don't worry, because I got several questions previously. So maybe
Oh,
I can
okay.
ask you first, maybe.
I thought I was gonna get off easy, but please fire away.
So I got a question from our audience previously. So the question is, Do companies currently using BitSight rating today in APAC maybe?
Mhm. Yeah, we are seeing a lot more tractions. So I've been in BitSight for about 3 years now, covering APAC, and the amount of traction we have gained is really tremendous. From use cases using BitSight to monitor critical infrastructure, right, to customers who use BitSight for the purpose of monitoring their third-party vendors, like what I've talked about, but also using BitSight as a means of security performance monitoring, right? So they are able to track, because the BitSight rating is updated daily. They're able to track how well the company is performing in a trend graph. So just like in stock markets, right? I'm pretty sure the board is very sensitive to graphs, right? If they see a graph that is trending upwards or consistently high, they're gonna know that the organization has a high performing cybersecurity program. But if you are not performing so well, if you're trending downwards or if you're low, and if you run benchmarks against your peers and competitors, and if you're not doing as well, then for sure the company has some challenges against cybersecurity as a practice. So these are various use cases I've come across, and absolutely, we've got customers ranging from governments to regulators as well, to financial institutes, who will use us in this few use cases that I've just shared. And if you talk to us one on one, we can probably share a bit more with
Okay, so I also got an interesting questions.
you. Mhm.
So the audience asks whether they can use the BitSight rating for their own company.
Oh yes. So yeah, I kind of touched on that point in my earlier response. Yes, you can use BitSight ratings for yourself, and companies do that. As I shared during the presentation, of course, you can conduct VAPT scans against your own company, but it's highly unlikely you will conduct a full-on scan of your entire attack surface every day, right? So employing a technology like BitSights actually provide you with a means to observe your own organization from an outside-in perspective, right? And all this being a very passive approach. So it it's not a proactive scan. So you won't necessarily introduce any kind of performance issues, latencies, and so on. Probably cause downtimes. If things go really sideways, and being able to have this level of monitoring and be able to track the performance, like I mentioned earlier on with the graphs, absolutely helps with that conversation. And when you band that together with the independent studies and correlations to a likelihood of a data breach, as you improve your ratings, you can literally tell your board of directors that, hey, by investing in this certain technology, like recently we bought the biggest, baddest Palo Alto firewall, and that has blocked out all the botnet infections, and we are looking to improve our ratings. And you can show that in a rating in a graph. Now that is a very powerful tool, a very powerful conversation, a visual tool that you can show to your board. So absolutely, companies are using BitSight to monitor themselves in this sense.
Understood. So I got one last questions from the audience.
Mhm.
So they're starting up a third-party risk management program. So how can BitSight can help them, and how does the rating actually calculate the rating though?
Yeah, that's a really great question also. So how we can help? Like well, in the beginning of my session, I also mentioned that we do conduct third-party risk management workshops where we bring in stakeholders from the different teams in order to have a conversation around third-party risk management. Now that's one of the ways I can help. Not just through bringing together the different stakeholders, but also to share what are some of the best practices that's being practiced out of our customers in the United States and EMEA and so on, and also to guide that conversation to happen. For the company to grow their third party risk management approach. Uh, and of course, that's to say it's third-party risk management is really not about just buying a tool and addressing the challenge. It's also building entire process, right? People, process, and finally product, right? So you need to get the right people in, you need to have the right process established. And then finally, of course, the product comes in as the platform for everyone to collaborate off of. So absolutely, to talk to us about it. We don't have to run a full TPRM workshop, but I can share some insights with you into how we do this. But of course, the calculations of the ratings is something I covered just slightly earlier on. If you do have any questions about it, come talk to me. I can cover it more in depth. But as a quick recap, essentially what we do in a nutshell is that we gather a lot of external intelligence on the internet, right? General internet telemetry. We correlate that to your public footprint, which is gathered off of public registries, and basing off your company's hierarchy, the internet representation of your organization through LinkedIn, Bloomberg, your annual reports, and so on. We calculate your ratings for your company as such in a range of 250 to 900, which is very similar to a financial credit rating. It's a lot more easier to understand for your stakeholders. So it can eventually be the common language between the legal team, the marketing team, the procurement team, and so on. And it brings everybody onto a common platform for the understanding of cybersecurity risk when they engage with certain vendors. Right. I hope that that helps to give a better understanding of what we do.